Who are they taking subs from?
I think they're taking subs from just the open market. I don't see this as a zero-sub game right now. There's so many opportunities to basically add people that we're in the beginning. It's nowhere near, taking subs from Netflix or Amazon. It's just growing the market, basically.
We mentioned this Harris poll in the Journal yesterday.
Yep.
I think a third of Americans said they would likely cancel Netflix in 3 months to make room for a new entrant.
Right.
That's not too reassuring.
Yeah, it's funny. We have a neutral to negative view of Netflix. The valuation to us has always been a concern. When we do survey work, we find that a lot of library content is perceived to be valuable by consumers of Netflix, right? Now, I don't know if it's going to lead to churn of that magnitude, but I think the road going forward for all these companies is more challenging than where we've come from, right? You have to spend more money on original content. You have to manage churn. You have to work on partnerships that pretty much discount the product, right?
IT.
Exactly. It's just
marketing in the way that you did, and the cable companies do a lot of it for you.
So we came from a world that was great, right? 90 million Americans paid for TV. Everyone paid for it. The cable guys, drove, the fibers to your home. And the media guys just sat back and got paid for everyone. And now the world's changing, right?
Yeah. We've been talking about that very thing, Michael. Do you expect, it's funny, when I sat down with Stanky a couple of weeks ago and they rolled out, at least they haven't started it yet, but HBO Max and these others, are we going to be in a world where all the content produced by these companies is for their direct-to-consumer platforms, virtually all of it?
For the most part. You say virtually all of it. I would say for the most part, maybe 20%, 30% that they make goes to other people. But we're in a world now of librarying to yourself, right? Basically self-funding and self-creating. But the occasional show will find its way over their walled garden, right? But yeah, you're going to line up all these companies with their own production facilities and their own platforms, and that's what's changing too.
Well, with your subscriber projections there, at this point, are investors looking for just the pure numbers, almost like a startup tech company would, or almost like they would be looking at for a startup tech company, or are they actually looking at monetization right out of the gate here?
Yeah, Leslie, it's a great question. I think we're in a bit of a momentum, for Disney, it's a momentum trade. How many subs? This is the way Netflix has been for 5 to 10 years. We'll worry about making money later. Let's just get some subs, right? Let's aggregate as fast as we can. I'll worry about the economics down the road. So Disney's trading on the anticipation of a big opportunity.
Is that what we're going to be? Is that what we're going to be focused on the same way we are with Netflix now every quarter with Disney? Because they have seemed to have done a very good job of acculturating their shareholder base to this idea. We're going to be spending money, and the numbers may not be what you had anticipated they would be 2 years ago.
Right.
But so what?
That was a key transition, right? And you were there for they basically said, look, we're going to lose this much money. And we're okay with that as a company. And the street said, okay, we're okay with that too, if you deliver the goods. And now we're just focused on subscriber metrics, right? So they've done a great job in redirecting our attention from the bottom line to the subscriber forecast number.
But this is Disney. So, you've got a situation where the stock price has been rising in anticipation of this, but you all have been actually lowering your forecasts for earnings estimates.
Right.
Is that going to come back to haunt the stock price?
Well, my first rule of thumb after all these years of being an analyst is earnings revisions drive stock prices, right? Numbers go up, stocks go up. Numbers go down, stocks go down. This is the odd example where numbers came down pretty dramatically and the stock has gone up. Because I think to all your questions, the metrics have changed, right? The metrics are all about growing the top line, not about EPS right now.
We'll see if that happens with the S&P.
Right, yeah.
If forward projections go down.
Right.
Finally, you're not as constructive on our parent, despite some arguments that it benefits the broadband universe. Others say there's a point of indifference between your content sales and your broadband sales.
It's really Craig. So my partner, Craig Moffett, the Moffett in the firm, has a positive view on cable, but a more worried view about NBC, and he'd like the Sky acquisition, right? So if Comcast traded as cable only, we'd be as bullish on that as we are in Charter and Altice. We like that business a lot. It's the media business that they own we think drags down the multiple. So that's Craig's call.
Michael, let me come back. I know you always come prepared. Let me come back to something today before we let you go, which is CBS reported earnings this morning. The stock's down almost 4%. Viacom obviously down a like amount. What was wrong with the quarter?
Well, I think it's to maybe Leslie's question about, or your point about selling the story. They're also transitioning to a more DTC world. but they've not yet really broken out the cost of DTC. You see it in the cash flow, but you don't see it really on the income statement, right? So I think they need to reframe expectations. They're spending a ton of money. They've talked about 30 to 40% more hours on
94 shows,
yeah,
something like that.
Up 18 year over year, right? Yeah. And that's a major investment, and you're not seeing the benefits come through as clearly. They're coming through, but they need to be more transparent in their financials to sell the story, right? And I think the big takeaway for me is that what Disney sold is a massive lifeboat. They have this, between Hulu and ESPN Plus and Disney Plus, they have this big opportunity to transition in a scaled way. And CBS has to convince people that they have the same scaled opportunity, because singles and doubles won't do. This has to be a triple home run. It's got to be big enough to get people to look past the investment spending and look at the big picture, right? So I think it's a communication strategy opportunity for CBS.
You don't think it's demographic related? Older people tend to watch CBS, therefore less. I don't know. That's just a theory.
Well, that's true, but on OTT, they're trying to get younger consumers, and they have Showtime, and they're going to put more and more sports on CBS All Access. But it has to be the belief of this is really a lifeboat. This helps our business 5 years from now to make it a bigger business that's going to be accretive to growth. And they're telling us that on their earnings call, but you don't see in the numbers. And Disney broke it all out. They took the Band-Aid out and they said, hey, $4 billion of losses, deal with it.
Well, to quote Roy Scheider, they may need a bigger boat.
A bigger lifeboat.